There is something interesting going on with the soy token. The price itself performed pretty much according to the market. It didn't outperform much, it didn't underperform much. Yet, a lot of people search for the token. There seems to be a lot of attention on this asset, despite there not being necessarily a lot of momentum. What's going on? Let's have a look at some data most people are not considering. So here's what I mean. This is the latest video on soy published on this channel 5.5 days ago. The video got 82% more views than the average video. And all of that performance comes from YouTube search. Now here's the price performance of soy in the last week. It pretty much just went sideways. Bitcoin, on the other hand, appreciated by 6.6%. Now this is not the first video on soy on this channel. I've published several videos before. Feel free to check that out for all the fundamentals around the blockchain. In this video, we want to look at usage. Now this is the total value locked on the soy chain. The chart starts in May of 2023. We see continued adoption with a recent surprising decline. Let's try to figure out what happened over here. Now here's the same total value locked, but this time not in US dollars, but measured in soy tokens. Now why would we ever do this? We do this because the total value locked on a chain is of course correlated to its underlying gas token, right? If the token itself is going up, then a lot of assets that are connected to that token will go up in value as well. So looking at the total value locked in soy gives us an idea of how much decentralized finance is used on the chain, irrespective of what the price of the soy token is doing itself. And so yes, we do see some growth here as well, but it seems like we have peaked out in September of 2024. Since then, the momentum isn't necessarily that positive, and again, we see this recent decline. Now have a look at this. The Navy protocol lost a lot of its total value locked in the last week. Here's the Navy protocol's total value locked over time. It's a borrowing and lending platform, very similar to Aave on other chains. And what I found interesting is that we actually get a lot of return by supplying just USDC. If you were to supply a stablecoin on a borrowing and lending platform like Aave, you'd now get maybe 4 to 5%, not those kinds of rates. It seemed like another protocol, Soylent, took over some of the market share. Maybe because of competition, the borrowing fees on Soylent are now 0%. Now the soy chain seems to be getting used quite actively over time. The decentralized exchange trading volume tends to rise. And it just recently spiked as well. So this is now in US dollars. Here's the same thing in soy tokens. Again, constant growth. Here is the bridged total value locked. So when we have some value on another chain that we then move over to soy, we can bridge that value. So when people already have capital in crypto and they just want to use soy instead of their prior chain, they are bridging over. And again, we are at an all-time high here measured in soy. We are also at an all-time high measured in US dollars. Here we've got the stable coins over time. Again, the chain tends to attract capital right now. Now, how does soy compare to other layer 1 blockchains? How much activity is there compared to say Polygon or Avalanche or let's say Base or Solana? Let's have a look. In the last 24 hours, we saw 240 million worth of trading volume on the soy chain. This compares with only 183 million on Avalanche, and that compares with only 88 million on Polygon. So soy is more active than Avalanche and Polygon. Arbitrum, however, so that's a layer 2 on top of Ethereum, it does have more activity than soy. The same is true for the base chain. So in a way, it's a medium-sized project, right? It's not a micro cap, it's not dominating the market, it's somewhere in the middle with potential upside. Right now, the momentum is definitely positive for soy. But then, as with any altcoin, we always have to look at demand and supply, not just the demand in terms of usage on chain. We also have to look at how many new tokens will hit the market, because the price is determined by both. And a lot of soy supply hit the market after launch. The token is still inflationary, but the relative growth has definitely slowed down. So that's positive, right? We want to have as little additional supply as possible. Now let's go to the charts. I believe most people look at price charts the wrong way. Most people just look at soy this way here. It's soy in US dollars on a linear scale. The first problem with the chart is that it's a linear scale, not a logarithmic one. Here's the same logarithmically. With logarithmic scales, we can see percentage changes. So a vertical change over here is the same percentage change as a vertical change here. So whenever we do a move of this distance, we are doubling, no matter where the price is. That's not true for linear scales. For a linear scale, this here is a 200% increase, and this over here is only a 30% increase. But really, we are interested in percent gains, not in the absolute price. So logarithmic chart is the first important thing. The second important thing is we actually want to look at relative performance to Bitcoin. So we're not looking at SOI in US dollars, we're looking at SOI in BTC. And the reason why we want to do this is we want to get outperformance over holding Bitcoin. Bitcoin is highly correlated with many altcoins, right? When Bitcoin is going up, many altcoins go up as well. When Bitcoin crashes, the altcoins go down as well. So there's not a lot of diversification benefit by having all kinds of different crypto assets. We just want to get the best crypto asset. Crypto assets are competing for the same capital within a portfolio. And so because of that, we need to get more performance by buying something more risky. Why take on more risk if you don't get more performance? Now this is SOI relative to Bitcoin. And since May of 2023, unfortunately, we did not see outperformance. So despite the usage growth, the token couldn't do better than Bitcoin. And again, I think that was because of the massive supply increase in the last months. But the tokenomics have now improved and the chain continues to see growth. Unfortunately, the price relative to Bitcoin is also quite high. So it's not necessarily a bargain to get into SOI now. There's definitely the possibility of SOI to underperform Bitcoin by 30% in the next weeks. There's also the possibility to potentially outperform by 50 or 55%. We are somewhat balanced relative to Bitcoin, with the current very short-term trend rather being negative. Now, SOI is the 11th largest cryptocurrency. It's got a market cap of 13 billion, but it's the 6th most actively traded token on the perpetual futures market. So there's a lot of levered short-term betting on the price. And that, of course, also increases volatility. Most people that bet with leverage on SOI, on the perpetual futures, tend to bet on rising prices because the longs have to pay the shorts, so the financing costs are positive. There is a correlation between the open interest, so the amounts of the bets on the price, and the price itself. And we did see a massive rise of open interest recently. People are betting on further rising SOI prices. And the spot price has not yet adjusted to that increase in open interest. The trading volume of the token on the perps is of course going up as well, and so are the liquidations. We are at a relatively constant level of liquidations. So there's not too much of an imbalance in the token. It's not particularly high versus Bitcoin, it's not particularly low, but people do tend to bet with short-term capital on further rising prices. The open interest is rising, and so is the financing rate. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now, this is the exact same time frame that we see in those charts. And what we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar, it's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently 125 US dollars per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.